Great, thank you for your responses. And now I'd like to introduce Neil Lefevre, Product Manager for Convey. Neil is going to outline the current state of the state for information reporting, as well as highlight some of the 2011 reporting updates.
Great, thanks, Lauren. So we're going to spend the first minute or two talking about just overall kind of what we're seeing as an information reporting community and trends. Spend the majority of the time on the 2011 updates themselves, and then talk about a few practical and tactical things that you can and should be doing right now to make sure that you are prepared for these changes and to ensure a smooth and successful January this year. And then with any time at the end, we'll try to get to a few questions. So I like to kind of start off telling this kind of state of the state story, and it's unfortunately a little bit depressing, but I think it is important because it does kind of give some background as to why some of the changes that we're seeing, why they're happening. So basically, to be blunt about it, the feds in different states are broke. Most of them are running in a deficit situation. There are, shortages all over, and they're looking for any way to bring in additional money that they can. And one thing that's starting to become more and more popular is something that you've probably heard, but it's increasing revenue without increasing taxes. And really what that means is, there's a couple ways to kind of get rid of that deficit. You can cut taxes, you can increase taxes, or you can cut various services or get rid of people. There's various ways, but all of those are not very popular options, at least not to certain individuals and or groups. So there's this idea of increasing revenue without increasing taxes. And how are different agencies doing that? Well, one of the main ways is through information reporting. So if you increase information reporting, different studies have shown that the compliance in tax that is reported increases greatly. So if you add information reporting, add additional forms, you're going to get more compliance, i.e. more revenue, and you don't need to raise taxes, get rid of people, get rid of services. We've also seen an increase in penalties, and we'll talk more in depth about that in a minute, but for those folks that aren't complying properly with the rules that are out there, the different agencies are saying, well, we're going to increase the amount of that penalty, and that's another way we're going to raise revenues. We've also seen, in general, the ability to abate penalties when they're assessed is becoming harder and harder to do. So as penalties are assessed in kind of the good old days, if you will, of even a few years ago, if you got a penalty assessed, you would simply write out a letter, send it in, and in most cases, most of the penalties were abolished or abated. And we're seeing that process of abatement is becoming harder and harder. And then in general, we're also seeing states kind of following suit. So increased information reporting, increased penalties, stricter abatement processes is really starting at the Fed level, and we're watching it trickle down to the state level. And again, we'll talk more about that as we dive into the presentation. So let's actually dive into some of the changes. And the first one I actually want to talk about is something that took effect this year, and you guys should have seen it in your penalty notices, and that is the increase in penalties for late or incorrect returns. So if you look at the table below, we have the current penalty list. So if you file your information returns incorrectly or they're late, previously the penalty tiers went $15, $25, and $50. They are now $30, $60, and $100. So right off the bat, if you're late on any filings or you need to do corrections, the amount that you're going to be responsible for paying in penalties is automatically doubling. So a great way for the feds to increase those revenues without changing the taxes. Another thing that we've seen this year is Form 1042-S has been added to the penalty notice list. So previously, when you filed Form 1042-S, no penalties were generally assessed on those filings. That has changed, and now Form 1042-S is being assessed penalties for late and incorrect filing. So you should see Form 1042S appearing on your penalty notices. And when you do get those penalty notices, again, that abatement process is becoming harder and harder to do. So this is probably, this next piece I want to talk about, corporate reporting, sometimes called 6041 or Super 1099, is probably the biggest or most talked about regulatory change that was on the horizon for this year, and that was the reporting of goods in addition to services on Form 1099 MIS, and also the reporting of corporations on Form 1099 MIS for purchases. And this is currently repealed, and so any reporting on 1099 MIS should be followed as you have done in the past. So a lot of AP departments out there are, you know, taking a big sigh of relief because they were poised to produce 10, 20, maybe even 30 times the amount of 1099 MIS forms this year. But again, that has been repealed. So for any purchases made or payments made to corporations or for goods, those do not need to currently be reported on Form 1099 MIS. So with that being said, kind of these first two issues, penalty increases as well as corporate reporting, a lot of the issues that surround that reporting has to do with clean TIN and name data. And looking at the survey results, the biggest concern that you guys voiced in that survey was accurate information. It far outweighed all the other concerns out there. So having accurate TIN name information is a high concern, and especially for folks who would have fallen under corporate reporting or 6041, the amount of penalties and time it would take to clean up that data was huge, and that was part of the reason that this got repealed. Is it would take a long time to clean up that data. You know, folks didn't have the appropriate TIN name information. But let me tell you that we're already seeing folks bring up 6041 reporting again. So although it got repealed right now, if you look in the 2012 budget proposal, there is information with pieces of that legislation included, and there's rumblings about different folks trying to bring that back. So with corporate reporting, if that's enacted, it's going to bring in additional revenues in the tune of $10 to $20 billion, and so it's only a matter of time before other folks say we need additional money, we need to reenact that. So although it's repealed, you shouldn't just sit on your hands and say, good, I don't need to worry about it, we'll worry about it, you know, in the future. Cleanup takes time. So you should start now collecting accurate name and TIN information. And I just want to talk for one or two more slides about that process because it is so important, and actually based off of the survey results, it's clearly important to you guys as well. So in, you know, a few years ago, getting clean TIN and name information was kind of an afterthought. It was a very reactive process where you would get a B notice in the mail or from the IRS, you would create W-9s or second B notice letters, you would send those out, you would gather the responses, and you'd be done with the process. It was a very reactive state. And I can't stress enough that you really need to start getting proactive so that you're getting clean name and TIN information up front when you're signing up your vendors, when you're signing up your recipients, so that accurate name TIN information isn't a concern. I had mentioned that the abatement process is getting harder and harder. We also already have talked about penalties doubling. So if you get accurate information proactively up front, you don't need to have that concern on the back end, and it's much cheaper to get it on the front end versus the reactive process where you're kind of regulated by the IRS in how you get the W-9 information. If you're proactive about it and you don't have a B notice yet, you can solicit and get that information any way you want. So, you know, really the way to go about this process is look at your whole recipient or vendor database, use the IRS TIN matching program to find out who's a TIN name match and who's a mismatch. And for all the mismatches, start soliciting those folks for the correct information. Since you don't have a B notice, there's really no rules surrounding how you gather this data. So you can send them an email, you can direct them to your website, you can send them the W-9 if you want. You can really do whatever you want. You can even pick up the phone and call them. We have folks that are doing that to get accurate information. So there's much cheaper ways in getting the information, i.e. emails versus paper W-9. So take advantage of that cost savings, get ahead of it so that, you know, if the 6041 rules come into play again, you're prepared for them. And also, with penalties doubling, you want to get that information updated and accurate so that you file it correct the first time. And really just kind of a word of advice from collecting that information, we've definitely found that individuals respond to solicitations differently depending on kind of their style of communication. So we recommend a multi-pronged approach, meaning you may start with emails because it's the cheapest. There's going to be a subset of those folks who don't check emails, don't like emails. So then you might want to move on to paper W-9s, and for folks that don't respond to that, then move on to phone calls. So if you take a multi-pronged approach, you can usually get your recipients and or vendors to respond to those solicitations. And then once you collect the responses, if you look at the diagram kind of in the middle or lower section of the this diagram, you know, you want to solicit for correct information, you want to collect the responses that you're getting, you want to update your source systems, and then you want to re-tin match that data, and you want to ensure that the information that they provide is accurate. We found that over 25% of W-9s that get returned still have bad name and TIN data. So even if you get W-9s from all your recipients and or vendors, about 25% of those responses are still invalid, so you still need to do a second, third, maybe fourth solicitation to get that updated, accurate information. So again, doing this with time, you'll have, you know, the ability to do multiple solicitations. If you wait until new rules or laws are enacted, you won't have that time to work with, and you may not be able to gather that accurate information. Okay, enough of me talking about clean name TIN information. Let's move on. So another big change this year, 6050W, also known as 1099K reporting. So this is a new tax form for 2011. And this is reporting for payment card transactions. So every time you swipe, for example, a debit card, the acquiring bank that processes that transaction will send a 1099K to the merchant or the store where that card was processed. It also applies to third-party network transactions, so folks like eBay and PayPal, who are kind of an intermediary in processing payments for unrelated parties. So new form for 2011. We could spend a whole lot of time talking about all the nuances with 1099K. We actually, if you go to our website, we do have an hour-long webinar with a few tax folks who talk in much more depth and detail than we are going to be able to today. But we would encourage you to go look at those webinars if you do have 1099K reporting responsibilities. So good news for AP departments is previously those types of payments were done through what was called P-card reporting or payment card or procurement card reporting. That is now being handled on Form 1099K. So if you were doing P-card reporting before, you most likely don't have that reporting responsibility anymore. So kind of a good thing for a lot of AP departments out there. This is an ever-changing form. Actually, within the last week, the IRS just released a new revision of this form. So if you do have K reporting responsibilities, there is a new draft or actually a new final version of that form on the website. So you're going to want to go check that out. There are changes in this form versus what was previously posted. And the IRS has issued penalty relief for 2011. So as long as you file your 1099K forms on time and you do your due diligence, no penalties will be assessed for 2011. Now, if you do have K responsibilities and you just ignore them or don't do them, you will not be able to see that penalty relief, and you will get a intentional disregard penalty. So very important to file this form, and even though there are no penalties, you still need to go through the appropriate process. So this is a little bit of a busy slide, but I kind of did it to kind of prove a point. 2011 form updates, I have most of the 1099 forms listed up here, as well as 5498, the 1098 series. All the forms in 2011 changed. Most of the changes are very minor. Instruction changes, updating captions, for example, from 2010 to 2011, and other various minor caption changes. So this, for the majority of the forms, the changes are very minor and very simple to make. One important note, Form W-9, which is required in response to first B notices, as well as what most people use to gather correct name and TIN information, that form has changed twice in 2011. So in February, the IRS released a revision and changed some of the language and verbiage on it. They actually have, in the last couple weeks, released a second change to Form W-9, and it has a December revision date. So for anyone who's collecting W-9 information, know that a new Form W-9 has been issued to the IRS, so you should make sure you're using that updated form. Okay, a couple forms that were not on that list. First one is 1099B. Lots of changes on Form 1099B for 2011, and it all revolves around cost basis reporting. They've added 5 new boxes to the form, rearranged a lot of boxes, and there are a whole lot of rules and regulations on how to report transactions on Form 1099B. Again, we can't get into all the details in this call because we only have a half an hour, but know that there are major changes to this form. So if you are processing Form 1099B, you need to make sure that you're talking to your own tax folks or other folks that are involved in this process, because you need to get additional data from your payment system. You need to make sure the form's updated, the transmittal's updated across the board, lots of changes to 1099B. The next form that had major changes to it was 1099R. Generally, a lot of insurance companies and financial service companies are on these webinars, so anyone who is doing 1099R, again, significant changes to this form. So boxes 10 to 15 have been renumbered. 2 new boxes were added, 10 and 11, and that has to do with reporting a new product type, really, which is in-plan Roth rollovers. And there was also a variety of instruction changes as well as distribution code changes. So a couple new distribution codes, wording changes, as well as you can now use B7 and 7B as distribution codes, and code D was removed from the form. So again, major changes to this form. If you are processing this form type, you're going to want to make sure you do extensive testing to make sure that everything is covered. Transmittal changes. In general, not a lot of changes to transmittal this year, so kind of nice. For the first bullet, IRS 1220, so that's going to be the majority of your 1099 forms, your 1098, 5498 series. Not a whole lot of changes. This is a little bit technical, but the A record in the transmittal changed. So if you are processing, generating transmittals in-house and not using a third-party vendor like Convey to do your forms, you're going to want to make sure that your internal IT staff has made those changes to the A record on the 1220 transmittal. Also, because of the form changes for B and R, there are extensive transmittal changes, which makes sense. If they change the form, they have to change what gets transmitted to the IRS. And then 1099K was added. If you're filing 1042S forms, the 1187, which is the transmittal specifications, basically had no changes, so that was very good. Just updating the tax year, extremely minor. W2 and W2C, again, minor changes to the transmittal there, so if you are doing any in-house processing for those form types, your workload is pretty minor. And then state reporting. So for anyone that is doing direct state reporting, not all the states have released their specifications as of yet. About half of the, I think, 41 states that have direct state reporting requirements have released. And in general, I'm not going to get into specific states at this time, but in general, what we're seeing is there are a number of states who are requiring additional form types. So maybe a state only required, the 1099-R form, for example. In previous years, in the 2011 specifications, they're now saying we want to see all form types in your transmittals to us. So if you do have direct state reporting obligations, you want to pay special attention to those specifications this year, as we are seeing a number of states making changes and increasing what they would like to see reported to them. Another kind of nice change for the information reporting community in 2011, tin masking. So 2 years ago, the IRS launched a pilot program they called tin masking, where they allowed you to hide the first 5 digits of tins on printed statements. You could use X or stars. You can see a couple examples there. And this was a great thing because it increased the security of statements. So think about it. You're printing a tax statement. It's got individuals' names and individuals' tax IDs. If that gets delivered to the wrong individual, if someone moves, if that form gets into someone else's hands, the wrong person, a malicious person, they have enough information to potentially steal someone's identity. So the IRS launched this tin masking program and said for any individual, tin type being SSN, Social Security number, if you're doing a paper delivery of a statement to an SSN, you can hide the first 5 digits of the tin. So if that document gets into a malicious person's hands, it's a lot harder for them to do anything bad, and they don't have the full Social Security number. So that was actually set to expire this year, but the IRS has issued a 2-year extension to that program. So for tax years 2011 and 2012, you're allowed to mask tins on printed statements for Social Security numbers. We'll see what happens after this 2-year extension, if they keep it or not. What we're hearing is that most folks generally like this program, and we're hoping that they do keep the tin masking program beyond the 2-year pilot extension. One thing that you'll notice is that they've removed the tin masking language from all the form instructions, and they are not planning to add that language back in 2011. So if you look at a 2010 form, it has specific language about tin masking on it. In 2011, that language was removed. We are hearing that in 2012, they are going to add that specific tin masking language back. So just something to be aware of. Don't be alarmed if that language isn't in the instructions. Tin masking is approved for 2011, so you can continue to use it. And then, anytime you print forms and mail them, it's inherently insecure because those forms are touching a lot of people's hands. There's, secure information that's traveling all over the country. Convey would definitely recommend using something like e-statements or electronic statements as a more secure means to send tax statements to individuals. So what I mean by that is, instead of mailing a form, your recipients would log into a website, log in securely with a username and password, and print their own form right there in their house, much more secure than paper statements. But if you are doing paper statements, we would definitely recommend using tin masking. Okay, so those are kind of the major updates for 2011. As I mentioned, a number of those topics have a lot of content behind them, a lot of rules and regulations behind them, and we just don't have time in a half an hour to really deep dive into those. But we do have a number of longer dedicated webinars on our site that you can watch to get more information about those specific topics. 1099-K specifically, I'll also mention in a moment, or Lauren will mention a webinar that we have coming up with Steve Mercanton, who is a tax attorney on state reporting. So if you have specific state reporting questions or concerns, that's a great webinar to attend. So kind of what's next? Just want to talk for a brief moment on some things to be considering, to be doing over the next month. So it's December 7th today. We have, a third of a month to kind of prepare for January and get ready for the busyness and hectic, month of January. So what should you be doing today to kind of prepare for January and make sure that you have a smooth, successful season? First and foremost, I can't stress enough, procedure review. I highly recommend making a project plan for your information reporting process. it's going to save you so many headaches and catch so many issues and so many things that you potentially would forget about if you don't write it down. So if you have procedures, great, review them. If you don't have procedures, make 2011 the year that you create those processes and procedures for 1099 reporting. Very common situation we run into is that people move jobs. They get promoted, they move on to another company. You know, guess what? Sue's been doing this for 10 years. She knew the process in her head, but never wrote it down. Now she moves on to another organization or another role within that company. It's inevitable that the new person is going to forget something or something's not going to go smoothly. So make sure you're documenting your process. If you do have a documented process, that's great. Now's the time in December to be reviewing those procedures, looking for any inconsistencies, any issues. It might jog your memory of something that went wrong last year that you can try to get ahead of this year. Another recommendation, pilot testing. What I mean by that is an end-to-end test of your information reporting process. So if you are a Convey managed service client, we try to make, kind of force you into doing this, but really it's a great thing. So what we do with our clients is we say, we're going to do pilot testing where you send us the data extracts that you're going to use for information reporting. We import those into the system. We create a few sample statements. We go through that entire end-to-end process and really simulate January and look for any hiccups to the process. Maybe we see a data file that's missing a new field. If we don't do pilot testing, we now need to scramble in January, work with our IT department to try to get that field added. It's a huge headache. We're under the time crunch, potential pitfall and issues. So go through pilot testing, do an end-to-end test, find those issues in December. They're much more easy to deal with than in January. Internal readiness. So in a lot of organizations, there's kind of one or a few people that are responsible for information reporting, but there's a lot of other people that are involved in the process. For example, IT creating the payment extracts or customer service folks who are taking calls. Have you worked with those other internal organizations or individuals to make sure they're ready for their process? So working with IT on those file extracts, talking to the call center managers. Maybe, if you're doing Form 1099, which has changes, have you added to the training process or procedures new screenshots of that form or updated training material to account for questions that folks may have on new boxes on the form? So internal readiness, make sure everyone within the organization who touches the 1099 process is prepared. I mentioned the W-9 was updated in December. I also mentioned 1099-K has recently been released. The IRS and the states can make changes whenever they want to whatever they want, unfortunately. So you need to stay on top of monitoring the IRS and the different state sites if you're not using an organization like Convey to make sure you have the most up-to-date forms. So stay on top of monitoring those. If you're using an organization like Convey, we're doing that for you. But it's still good to stay on top of what changes are so that you're prepared for them. And then something that gets kind of overlooked a lot of times is the corrections process. I know that's even a couple months out, but again, talking to your call center managers, if you do receive a lot of inbound calls, making sure the training materials for anyone who is receiving calls is up to date. A lot of times that's kind of forgotten about in the 1099 world, and you have upset customer service managers and upset folks who are trying to answer calls who don't have the information or updated processes at their fingertips. So make sure you are keeping those folks in mind and you are creating a good experience for clients who do have questions and have to give you a call. So with that, I will turn it back over to Lauren.
Great. Thanks, Neil. And I do realize that it's about 2:30. If you guys have the time, we would welcome you to stay on for a few more minutes. We are going to go ahead and answer some of these questions live. If, of course, you can't hang on, that's fine. We've got recorded all of the questions that have come in, and a Convey representative will definitely reach out to you and help to answer your question. One frequently asked question is, will we be able to get the recording and the slides? And the answer to both of those questions is yes. Early next week, you will get an email from me, again, with access to the recorded webinar as well as a copy of the slides. And with that, we're going to jump right into some of the questions from our participants today. This is also another frequently asked question. What is the best way to get access to the IRS TIN matching program?
So great question. We hear it often. This is something that you need to sign up for directly with the IRS. It's in their e-services section of their website. So if you just Google TIN matching or IRS e-services, it'll get you to the right spot where you sign up. The signing up process is unfortunately very difficult. You actually have to get an officer or principal within your company to actually sign up for your organization. They do need to provide personal information such as adjusted gross income in that sign-up process. That's how the IRS does their verification. In a lot of organizations, you're not going to find a principal or someone at a high enough level who was willing to do that sign-up and provide that information to the IRS. So that being said, you can go there, get the information to sign up. Another option is to assign an agent to do the TIN matching on your behalf. So an organization like Convey can help you with that process, even without you signing up directly for the TIN matching program. So great question, very common. Unfortunately, the IRS doesn't make it as easy as they could, but it's also a good thing because they're trying to make it secure so that people aren't fishing for people's name and TIN information. So it's kind of a necessary evil.
Great, thanks. Next question. If you solicit information from a vendor and they send you the same information that you have found previously to be incorrect, what do you do?
Yeah, another great question, very common. I mentioned earlier in the presentation that about 25% of W-9s that Convey receives back on behalf of clients is still incorrect. It can be a variety of reasons. It could be they updated their state that they're doing business in with a new business name, for example, and forgot to do the IRS. That's very common. Even more common is what they're providing on the W-9 is actually their DBA or doing business as name and not their actual legal business name. Very, very common. So what can you do? Really, all you can do is resend them another communication. At Convey, we actually have different solicitations depending on where they're at in the process. So we have a very generic initial mailing. If they send back the information and we still verify that it's incorrect, the second communication that goes to them is worded differently. So it acknowledges that we received the first W-9 or corrected information. Thank you for your update. Unfortunately, this information still does not match the IRS records. And then providing some tips, like make sure you're not using your doing business as name. This name can be found on Form SS4. There's a bunch of verbiage you can do to try to hint them to providing you the corrected information. Really, that's all you can do. The other option, Convey offers something called real-time TIN matching, where you can actually direct individuals to a website where they can key in their legal business name and or individual name if it's an individual, and their TIN number, and in real time we can validate that with the IRS. So if it's correct, we thank them for providing the information. If it's incorrect, right then and there while they're logged into the secure site, we can provide that feedback and get a second, third, fourth try to get the correct information. Generally, that's much more successful than traditional paper mailings.
Great, thanks, Neil. I just want to make sure to respect everyone's time, so that's the end of the Q&A portion of today's event. Again, we have recorded everyone's questions, and we'll be reaching out to you to make sure that you get that question answered. A couple of things I'd like to draw your attention to. For continuous regulatory updates and things like that, visit our 1099news.com blog. Whenever we hear something, we post it right away to 1099 News. So that's a great thing to subscribe to so that you can get most recent updates. Yeah,
I mean, things like new forms coming out and major regulatory changes, we're posting those there. So definitely, at a minimum, if you're looking at sites like that, we can kind of aggregate some of those compliance changes and help you stay on top of those. So it's a great resource.
And we're on Twitter and LinkedIn, so definitely look for us there. And then finally, some upcoming events. Next Wednesday, same time at 2 p.m. Central, we have a state reporting webinar with industry expert Steve Margaton, and that is actually a 1-hour webinar. If you received the email invitation to this webinar, the state reporting webinar is also in that same email. and you'll probably see an email from me next week with the last chance to register for that as well. Also, coming up next week, we have the Regional Summit.
Yeah, and this is a regional summit. It's in the New York area. So maybe, you know, everyone on the call may not have seen an invitation to this since it is regional. They only went out to folks, you know, kind of within driving distance. It's a morning session talking about creating a tax center of excellence, as well as various other compliance and information reporting sessions. So if you are in the New York area and you haven't heard about the regional event, you can reach out to Convey and we can get you some more information about that event.
And then probably our biggest tax and regulatory event of the year is Convey C2 Summit, and it is scheduled for September 23rd through the 25th of 2012, and it will be held in Dallas, Texas. And it's typically about 2.5 days of regulatory compliance as well as Convey solution sessions. And with that, that concludes today's event. And again, if you have any questions or would like any more information about Convey and how we can help, please visit us at convey.com, or you can give us a call at 1-888-303-1099. And again, I will get out an email to you next week with information for the webinar recording as well as the slides. And thank you again for joining us today.